I had a call yesterday with a guy who's building an AI hedge fund. The problem is all alpha is zero sum. And the real problem that we're dealing with here as financial professionals is that we used to be able to have an edge from being smart. We used to be able to outthink other people, but we're not going to be able to outthink O3. And so our edge from being smart is going to zero.
XRP is fourth largest in terms of market cap. Do you think it's overvalued or undervalued?
XRP in some ways like the oldest, most efficient, most reliable, most liquid money of any blockchain. The underappreciated part of XRP is that it's an alternative to proof of stake and proof of work. So I think we're just in a new paradigm where banking risk on, and XRP is the number one banking coin. If you believe that crypto is a $10 billion asset class, I don't see a reason why XRP wouldn't be a $1 trillion asset. Post Fiat is my best interpretation of where I think currency is going after AI hit. It's basically a world where you have a large collective of super intelligent AIs with groups of people around them basically doing what the AIs are telling them to do. I think that's the future. I don't think the dollar or gold or Bitcoin or XRP or Ethereum are appropriate expressions of where I think this currency system is migrating to.
Hey Alex, welcome to the Coordination Gates.
Thanks for having me on.
This is our first podcast, and what a way to kick things off by hosting one of our highest conviction bets at Hypersphere. What's the backstory of Alex, and how did it inspire him to create Post Fiat?
Yeah, I always loved investing and trading. I went to Wharton. I traded FX at Citigroup out of college. Became the number one user of Palantir, where I learned a lot about Swift processing, as well as mapping big data investing signals from large data sets onto corporate clients. And I joined Palantir subsequently. After that, I kind of took that knowledge base and joined Balyasny Asset Management to run a long-short TMT carve-out. And while I was there, I developed an advertising-based trading signal that originally was focused on LTV CAC and trading consumer stocks. But I very quickly realized that a lot of the alpha in the signal generation was due to attention, as we know in crypto, is now a very common view. But back then, it wasn't very common that there are things like memes, and a lot of the alpha that we're generating was from companies like Tesla or for blockchain companies where there were not real consumer products. And instead we moved into this framework of investor acquisition cost. And that's what really got me into crypto. And that's what introduced me to XRP originally, because XRP is one of the assets that has the lowest investor acquisition cost in terms of just activating people to buy the asset. And so I had familiarity with XRP, and it wasn't until the AI kind of movement, but I was still very much in the mindset of trading constantly. And it wasn't until AI hit when I really kind of, I think a lot of people in the investment management business felt the same thing, which is that you start to see that AI-based systems can generate better decisions than you can. Even on GPT-4. And I asked the question, how in this age of artificial intelligence, does anyone have a chance to compete? And, there's you have these worlds, so sort of like Citadel, the financial institution, where they're investing very, very heavily against analytical capabilities. But at some basic level, that the real capabilities of large language models is to influence opinions, right? To create content and to do all of these things that don't fit into a traditional hedge fund framework. And so I started building or trying to imagine what a system would look like that would be able to preserve just my own alpha. My question was, is there some way to build a sort of decentralized TGIS using large language models to have a sort of central intelligence in the middle of a group of people who are providing investment intelligence to a collective, which then would basically obfuscate and prevent that information from going to other collectives. And so a lot of people were kind of feeling the same thing. And so people started joining the Post Fiat community. And what we kind of realized organically from building this decentralized intelligence collective or group of people interacting with what was basically an AI agent in the middle was that XRP was the number one finance coin in the world, right? It's like the only large cryptocurrency project that has any interface with financial institutions who are populated 100% with people like me who are also having existential crises about their jobs basically being destroyed by artificial intelligence. Once we got more excited about it, then we started reaching out and raising money. But that's sort of how we got here, which is like, what Post Fiat is a sort of framework for intelligence collectives to retain their edge in the age of artificial intelligence, with an initial focus on financial use cases and making sure that, basically financial institutions feel really good about using the platform, having compliance embedded in all the transactions, building the system so it's natively capable to deal with financial markets use cases instead of transaction banking use cases like XRP. And so that's sort of like how we emerged on this idea. And so it's that's a bit of a long intro, but yeah, that's how it came up.
So Alex, a lot to unpack here. So I'll unpack in two parts, XRP and AI. So let's start with XRP first. There was a tweet that you did a few weeks ago. Basically, you told us to study XRP, Block 1, Tether. Tell us, why should we study XRP?
I don't think most people want to be Satoshi Nakamoto. I think he might be dead, right? So that's like the number one thing. And then the question is, what are the long-term generators of terminal value, not just short-term wealth generation, but very, very long-term wealth generation in crypto? And they're not that many, right? So the things that these ecosystems have in common is that they are essentially wealth vehicles for these sort of decentralized organizations to exist. So in the example of Binance, right? Binance is an ecosystem, and I don't think CZ wants to cash back into US dollars. Like at a structural level, like, he had to go to jail in the United States. Like at a core level, he wants to keep his wealth in BNB, and people understand that. Similarly with XRP, the holders are surprisingly sort of robust. Like they keep their money in XRP for many, many years. And when you really talk to the people in the XRP ecosystem, you're like, why are you still involved in XRP? And they just have a principled view. They like a large amount of liquidity. They don't like the Bitcoin consensus mechanism or its speed levels or its integration with Chainalysis and some other sort of off-ramp issues with Bitcoin. There have been periods in Bitcoin's history when there's like, long network outages where you're waiting like 24 hours to send transactions. And they just don't view that as like an acceptable thing. Proof of stake seems pretty new. And so they like the idea of working with banks because banks are off ramps and liquidity is like ultimately important when you're dealing with money, right? And like Block 1 is another sort of example where, they didn't cash out into fiat, right? They just, I think Bullish is IPOing this year, and I think it's something like a $10 billion crypto portfolio that is sort of behind Bullish, and they never sold it, right? Because at some basic level, the people who created those organizations were trying to move out of fiat, right? And so at a very, very high level, like the way to understand crypto in a valuable ecosystem is that people who are building currencies inherently don't think the existing system of currency is appealing. And if they're converting their money aggressively back into the old system of currency, that's proof that they don't actually believe in what they're doing, right? If Block 1 had sold all their Bitcoin, or if, XRP, if the whales had divested their holdings like aggressively, like we're starting to see, we're seeing this very real time play out in the current market where venture funds are seeking DPI on things like Celestia or Barracoin, like Bain Capital, when they backed Celestia, they weren't thinking in the mindset of like, I'm Bain Capital, I don't believe in fiat anymore. like I'm going to put my money in Celestia, right? That they were in the mindset they're like, I like the team at Celestia and it has like an interesting venture like outcome and I can sell a lot of tokens because the market's very liquid and that can work out great for GPs. But I just think that's like not what you really, especially if you're a founder who wants to build something in the long run. I think the model that you have to respect are those kind of OG guys who are like, we're trying to get out of the fiat system and we're building things that facilitate that outcome. So like that's like when I say study those guys, I'm like, yeah, these are the people who I view as role models. And as a founder, that's like really what you're trying to do. You're trying to build a new currency, not necessarily an equity.
So, Alex, XRP is fourth largest in terms of market cap. If you look at CoinGecko or CoinMarketCap, do you think it's overvalued or undervalued?
So I think it's still undervalued because of a sort of simple reason. It was 50 cents. The reason it was 50 cents before Trump came into office was because there was maybe a 30 or 40% chance that the Biden administration would storm into Ripple Labs and instruct them to audit their interactions with the members of the unique node list, who are mostly docs, right? So it's like the University of Waterloo, community members who have close ties with Ripple Labs. And that would have put major security issues on the network because the validator list is only 35. Most of them have close connections with Ripple Labs. And there was a world where they could be deemed money transmitters. Their US bank accounts could be frozen because, the US government knows who they are. If things got very hostile from a US perspective towards crypto, then XRP could have really, really struggled, right? And so if you take all of that negativity, and that's not even having to do with the SEC, by the way, right? If you take all of that negativity and you kind of flip it on its head and you say, okay, now the likelihood of all those things that I just described goes from 30% to 0%. Like, what type of world are we in? Or like, okay, well, that's a world where suddenly you have an asset which is trading $10 billion a day, which has zero likelihood of censorship from the US government. So it's basically a liquid store of value and it's highly differentiated. And like, I guess this is post fiat relevant too. When you kind of look at what the Trump administration's doing and what its focus is, they are not market friendly. Like they are actually cutting government spend and they are generally, moving away from asset protection. That's like the Elon Doge project and everything like that. But at the same time, they don't want the market to blow up. And so they're already taking a ton of actions to deregulate the banks, enable them to custody and engage with cryptocurrency assets, as well as just cutting their capital requirement, right? So if you kind of think about it, like the level of debt to GDP in the United States, or like, what a lot of crypto people point to, if you do a bunch of things that remove liquidity from the system, such as cutting fiscal spend, if you don't want to cause a market collapse, which I don't believe Trump wants to cause, then your only real option is to deregulate the banking sector, right? Which is kind of at the highest level of capital requirements. It's kind of at the highest level of regulation. The risk-taking capabilities of these banks has been gutted for the most part. So this is sort of like a post 2008, sort of giant regulation. Your only way to maintain liquidity in the bond market, which by the way is not doing very well, is to say, you know what, like we're going to allow banks to take more risk. And they're already doing those things. And so from an XRP and a kind of banking coin perspective, like you have this double tailwind of very crypto friendly administration combined with the banks being told, risk on, right? And what are the banks going to do? Like when they see the president of the United States drop a meme coin, right? They're going to say, you know what, we're going to get our FX desk involved with crypto. We're going to get our venture arms involved with crypto. I mean, we're both seeing that, right? You're having discussions with banks on behalf of Post Fiat. I'm having discussions with banks actively. The likelihood of either of us having those discussions in October, that would have literally been insane, right? Like it just wouldn't have happened in a million years, especially if the protocol is named Post Fiat and you're like interacting with the bank, they'd be like, call security, right? So I think we're just in a new paradigm where is banking risk on, and XRP is the number one banking coin. So it's still, if you believe that crypto is a $10 billion asset class, I don't see a reason why XRP wouldn't be a $1 trillion asset.
Regarding XRP, I get the argument with regards to bank's balance sheet. I also get the argument in terms of it having a retail appeal. But XRP at the moment doesn't have a smart contract. Why do you think it's ideal for institution or big players?
Well, I mean, they made a couple design decisions that are very institutionally friendly. So the most basic one being trust lines. Unlike Solana, where the network is basically permissionless across the board, you have to have trust lines in XRP in order to send tokens, which is a basic compliance requirement for any financial institution. And then additionally, smart contracts are probably coming to XRP in some format kind of later this year. But the core use case that XRP was solving was primarily related to capital requirements that were excessive on international money transfers. And so, essentially the argument, the core argument of XRP is that whenever you send an international wire transfer, the reason not only does it take like 4 or 5 days, but it also has double capital requirements because you need to keep both currencies on either side of the transaction. And because you don't have an intermediary neutral settlement layer that can instantly clear money, right? And so XRP at its core never really was about smart contracts. XRP was always about the egregious capital requirements that were put upon international money transfers, and using blockchains to reduce those requirements, right? Now, what has happened in practice is that, there are only 30,000 daily active wallets on XRP. And the reality is that people look at XRP and they say, this is an old consensus mechanism. The coin is very liquid. I know that it's not going to go down. It's cheap to secure. Unlike Bitcoin, like a big differentiator from XRP and Bitcoin and Ethereum is that XRP validators do not cost very much to run. So one of the decisions they made was that they don't require full history sync. It's very hard to get a copy of XRP's full history. In fact, we're going down that rabbit hole. There's like a couple copies floating around, but it's not easy. And so they deliberately cut that.
Yeah, I think that's a big problem. On the longer term horizon, blockchain tend to get centralized if they want to achieve increased throughput and reduced latency. And it's interesting that XRP took that design decision or trade-off upfront.
Yeah, no. So they kind of have this system where even if you kind of took the total spend of the top 35 XRP validators, it's not very high. It's something like $2 million a year. And so you can make the argument that that's inherently decentralizing, right? Because it simply doesn't cost very much to secure the XRP network, which is actually an insane thing. If you kind of think about this $250 billion asset that costs like $2.5 million to secure, XRP in some ways like the oldest, most efficient, most reliable, most liquid money of any blockchain. And, in a way, smart contract, like not having smart contracts, like if you really kind of get into it, if you were to ask David Schwartz, I think his answer would be like, we haven't needed smart contracts to execute on the mandate of delivering decentralized money to date, right? Now that's changing because they're seeing a lot of things they're excited about in smart contracts. But I think that's sort of like, the underappreciated part of XRP is that it's an alternative to proof of stake and proof of work. And it has a weakness, a critical weakness, which is that extreme economic efficiency comes at the expense, to some extent, of centralization, right? Because they have exposure to the U.S. government because of the proximity of Ripple Labs. And so, in our view, like XRP is valuable. It's an original primitive. It's going to keep going up. But, in Post Fiat, we're a little bit opinionated that like, okay, what happens in 4 years if Trump loses? We don't want XRP going back to 50 cents. And so we've kind of developed a completely different framework specifically for the unique node list selection, right? So we believe that because the new primitive that is capable with large language models is that you can take vast amounts of unstructured data and objectively and trustlessly convert it into structured data in a way that was not possible 2 years ago. So what that means is that if you and I have a bunch of XRP memos, you and I can both agree what's in those memos. And we can use LLMs to come to a score that you and I both see that tells us who are the valuable addresses on the network, right? And we don't need a third party to do it. All we need is a model, a set of prompts, and a temperature setting. It's a group of parameters, and you and I can trustlessly agree, okay, these addresses are legit. So there's a new primitive with large language models that Post Fiat uses to drastically improve some of the big weaknesses of XRP, which is that, essentially there's this opaque process that's run by this organization called the XRPL Foundation that publishes a unique node list, which is essential to XRP's network security. It's a selection of 35 validators. In Post Fiat world, we're going to do things a little differently. And we're going to use basically large language models and to create a social contract that determines who those 35 validators are, such that like in the future, there's not a centralized entity that the US government can kind of lean on and say, you know what, shut this down, right? It's going to be actually a way to decentralize the core XRP unique node list selection. So that's another thing that we're very focused on, and like we're super excited.
So, Alec, just to give a summary for our audience in terms of what Post Fiat is trying to achieve, basically you'll have a blockchain which will have an architecture which resembles something similar to XRP. You'll have AI agents and agentic services that will be running on top of that blockchain. And not only will they provide those services, but they will also be securing the blockchain. And in terms of economic rewards or emission they get from the blockchain is proportion to the economic value these agents produce. And in our architecture, in Post Fiat architecture, it is easy to determine the economic output, economic value of output because LLM output can be measured. It can be deterministically measured. Is the understanding correct?
That's mostly right, but I would add just one clarifying point that there is a core consensus mechanism on XRP called the unique node list, which is a group of validators that are essentially super validators. And that is the primary mechanism which you can criticize the XRP network for being centralized. Because the selection of that unique node list is done in an opaque way, even if we didn't have any network emissions, right? Even if we didn't choose to incentivize the unique node list, there is still an objective process on Post Fiat, which is published monthly, much like XRP publishes a monthly report on their emissions and their market sales and market conditions and use cases and Ripple Labs VD stuff. In Post Fiat world, we publish a set of prompts, a set of AI models, and those models are used to determine who are the members of our unique node list. Like, yes, there are emissions, things that we're doing differently than Ripple Labs, but kind of at its core, that unique node list is the core consensus mechanism of XRP. So we're taking a different view of how to do that.
Alex, we'll come back to the Post Fiat in a moment. What we did really well was we decoded XRP. I now want to double click on some of the trends you are seeing on the AI side of things. So in terms of your mental model, can you walk me through the evolution you are seeing at the intersection of AI crypto? So we saw what happened with Truth Terminal. Now we are seeing what's happening with AI agents at the moment. You have things like AI XPT, you have things like AI 16Z, AI Monica. What do you think the intersection of AI crypto looks like in 5 years' time? And how do you kind of see things evolving from now onwards?
The first iteration of AI crypto was people trying to come up with ways to use crypto to make AI more efficient. So early projects like Akash Network or Render Protocol were basically as a service tools that they believed would be a better user interface for people purchasing artificial intelligence calculations on a blockchain. In practice, those mechanisms, that was phase one. Phase one was cool, but it never really got material traction. So people never really ended up buying a lot of GPUs on Akash. Their total revenues of their entire history is like less than 2 million. And then phase two was the introduction of BitTensor. BitTensor was this new idea, which was that actually the big problem is community ownership of a big model, right? And so the idea of BitTensor is that like if we have all these subnets, then we can use all this information from all these subnets to train a community-owned model. And the unfortunate thing about the BitTensor model is that there was never really an alignment between the massive GPU spend and the reality of training a model like that. So very pragmatically, you're seeing these headlines in the Financial Times that big tech is putting $300 billion of capital expenditure into data centers. So the BitTensor model didn't really account for just the sheer amount of spend. That they have a lot of use cases and they have a lot of subnets, but there kind of wasn't the spend level that you would need in order to train a fundamentally new model, right? And so it's kind of in this twilight still. Now that could be changing with DeepSeek, right? Because the cost to train a model might be decreasing enough that the original BitTensor vision could be changing. But then the third phase of this was that once AI models got good enough, people started questioning the new mechanisms of attention in the economy, right? So you had the truth terminal to start out with, and then AI XBT. And people in crypto are so used to attributing market capitalization to attention that there is sort of this vision where you see this curve where AI agents dominate attention in the economy, and then people loosely link them to tokens that were essentially meme tokens that got a lot of attention, but those have subsequently derated because I think ultimately the models, I just don't think people believe the tokenomics weren't good enough, or the attention truth terminal wasn't cool enough to like sustain attention in a way that a human could. So ironically, it was just too early. And the fourth iteration, which Post Fiat fits into, is I think a kind of total rethink of this whole operation. It's that everything that I just described was using crypto to distribute AI calculation. Post Fiat is a little bit more humble. We're not trying to necessarily make a completely new base model. We're saying, look, we already have really good crypto primitives. In our case, XRP. There are other examples of we have partnerships in this area, but our core bet is that rather than asking how crypto can distribute AI calculations, we're asking the question, how can AI improve crypto consensus? And I believe that's like a big wave that's coming, where these large language models are taking lots of unstructured data. It could be DAOs, it could be groups of people interacting with AI agents like AI XBT. And the question is like, how can large language models use their property? Like, I guess like one heuristic would be like Bitcoin is trustless money. Large language models enable trustless judgment, right? So before large language models, you and I could never agree how economically useful a set of transactions were. Like we could maybe hire different groups of people to sort of score them, but they would never really converge on an answer deterministically in a way that large language models could. So that primitive allows us to make trustless statements that are qualitative in nature. So for example, we can say this address is a good address and this address is a bad address. This address is a Sybil, this address is not a Sybil. And everyone who has access to GPUs and open source models can agree upon those judgments. And so that new primitive is the mechanism with which you improve crypto protocols, which previously had glaring flaws. So in the case of XRP, the glaring flaw would be the XRPL Foundation's opaque process. It previously had to be opaque because large language models didn't exist, right? Like it's just as simple as this didn't exist. This wasn't possible before. And now there's an improvement. DAOs similarly had to have, all these people like a community manager, and there's like a Wizard of Oz situation where there's a guy who has access to the funds. That doesn't need to be true anymore, right? With AI agents, you can remove humans from the process. And I believe the next phase of crypto, especially with agents, a lot of people are like, okay, how many times does a dev run a project? How many times has a human done something that would be considered terrible corporate governance? I think if anything, crypto has taught people that trusting random people on the internet is a bad idea, right? And AI agents have the potential not just to, write code, but execute code and write code in a way that is trustless and auditable. So I believe where we're going in crypto in the intersection of AI is that there's increasingly going to be a response to this lack of trust in the crypto community that says like, you know what, we don't trust devs anymore. Like we want to know that the protocol was launched in a machine by an AI agent that anyone can run. And, maybe there's ZK proofs of it. And say, okay, there are execution standards that we're now imposing on crypto. And I believe that's how we go from, 57% Bitcoin dominance to like, it's actually kind of insane when you look at the macro. Like Bitcoin has nothing to do with artificial intelligence, and Bitcoin dominance is at multi-year highs, right? That's sort of telling you at a very, very aggregate level that right now crypto hasn't really benefited at all from a market cap basis from artificial intelligence, right? And XRP being a big winner in the altcoin market is yet another example of that. Like, XRP dominance, it has nothing to do with AI, right? And so the market is telling us right now that the existing permutation of crypto being used to distribute AI was actually an incorrect frame or a frame which isn't capable of supporting multi-$100 billion market cap projects. And so I think this new paradigm is going to be, how do we use this AI primitive, which is trustless judgment, to improve crypto as an asset class, especially altcoins?
So my understanding is the way you're thinking about things moving forward, it will be AI improving crypto, but not the other way around. So for instance, the way Post Fiat will consolidate things is, for example, BitTensor has issue in terms of accurately giving out economic value to output generated. XRP has issues in terms of centralized emission. With regards to virtuals, you have no way to assign value. There can be many agents created, but there's no way to assign value to that particular agent or do any valuation exercise on top of them. So you think the next evolution is Post Fiat will help consolidate all of these things, and AI will help improve the way blockchain works. But you're also saying it's not just the AI helping the blockchain, but AI also helps crypto by helping improve things up the stack as well. So for example, with new AI technology and AI frameworks, one can argue dApps and user experience will be better. Is my understanding correct?
I think so. I think you're just going to see a lot of, maybe a heuristic, a very, very simplifying heuristic, is that there's a huge demand in crypto for governance. Governance processes are the worst they've ever been. 1 week vests, people unloading tokens, just devs doing insane things. And it's sort of like a get rich quick scheme, and it's anarchy. It feels like anarchy. And I think the way that AI is really going to interface with crypto is that it's going to be the tool that we escape anarchy, right? And part of my vision with Post Fiat is like, okay, the way that we escaped anarchy in society is with human beings, right? We have governments, we have guys with guns who basically prevent you from doing the things that are common in crypto, right? And that solution centralizes authority with single groups of actors. And, my vision is that we're going to move away from the necessity of violence to enforce social rules. And so I think crypto, also societally, is going to be basically a proof, a test bed. Can we use AI systems to govern ourselves more effectively? Right. And if the answer is yes, then I think there's a lot of I almost view crypto itself as a sandbox for artificial intelligence to prove that it's capable of doing stuff, right? Because at the end of the day, actually things like AI XBT and Zero Bro, they're not just crypto protocols. They are proof that AI can or cannot generate engagement, right? It's some sort of very, very high level. There's a litmus test. If all of this AI hype is true, then you should be able to have an AI agent that drops a better meme coin than a human being. You should have a AI agent that runs a more effective DAO than a group of people. You should have an AI agent that runs a more effective consensus protocol than the XRPL Foundation. I think that's
Or
sort of like
swarms, or swarms of agents like XPT.
exactly, yeah, swarm.
Alex, what do you think will be the bear case for Post Fiat?
The bear case for my protocol. Um, I think the bear case would be that there's a quality problem with uh, whenever you introduce a set of AI based rules into a system that allocates network escrow, you are taking a big bet on AI's ability to 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 distribute rewards effectively. And the bear case is if AI systems cannot, basically survive Sybil attacks or creations of bad actors on a network. Like in other words, if they're truly, if let's say there's someone who has a set of closed source AI systems that is able to create nodes on Post Fiat that ostensibly are validating the network and ostensibly look like they're valuable actors and are generating ostensibly useful unstructured data. And we are not able at a prompt or model level to determine that those are bad actors, then we wouldn't be a material improvement over the XRPL Foundation. Now, we have some, and actually in our very early iterations, obviously with any bear case, like you actually have to think about these bear cases all the time, because when you're trying to build a system, you have to try and address the bear case, right? So in our case, there is a critical architecture thing that's actually tricky in XRP world. Large language models actually can look at the docs URLs and identities of the unique node list in order to tell which one of them are legit and which ones are not. And so in our case, the bear case is that we're not able to basically add a priori social validation on top of our baseline system. And then we distribute a bunch of rewards to bad actors. Those bad actors sell the rewards before the network becomes liquid. And we face a bad tokenomics situation because, in XRP, you can say it's centralized, but ultimately one entity getting all the tokens has allowed them to do a masterful job market making their coin. They're famous. XRP is famous for just being very, very effective stewards of capital, effective in terms of their selling of the token at the right time. But you can't have that level of efficacy with a group of decentralized nodes, right? So the big difference between us and XRP is that we're becoming we're really leaning on this decentralization thing. And if we get tokens in the hands of the wrong people, then we won't succeed. So I think that's our biggest obstacle is just making sure that our systems can bring on the highest quality nodes, right? And so to address this, we are trying to start from day zero to only get, I guess in crypto terms, diamond-handed holders or nodes that have an economic incentive to use this network that's very different from your traditional kind of I think BitTensor, for example, they have this structural issue where the subnet miners, they're there to make money. this month. They're there to make money this month. So their business model is earning a bunch of tau and selling it. We don't want any subnets like that, right? And that it became very clear to us very early on that a lot of subnets want to be on Post Fiat because they say, oh, this is the next BitTensor. And I think if we ran with that, we would actually kill our network, right? So I think that was like, a sort of like realization on our part, which will be hard because it means that we have to onboard banks. It means that we have to onboard, ultra high net worth individuals or family offices. And those are harder business development activities than going to someone who's already a BitTensor subnet, who's already technical, who's already ramped up on running a Tau subnet, and it's easy to work with, right? It's tempting. You're like, okay, like, yeah, you're cool. You're backed by NVIDIA, and you are running a subnet already. Like you can execute, but you're going to dump the token if you get it, right? And so I think we've sort of thought about the problem in sort of the Palantir framework that there are two, like the mid curve is people who want to sell the token this month. And then the other curves are financial institutions. And then on the flip side, there would be kind of ideological organizations. So there's a guy, for example, on Post Fiat building a church. He's not economically motivated. He believes that AI is replacing human capability and likes what the network stands for and thinks it's the right place to build his church. Or super PACs, right? Super PACs have a mandate. And one way to think about a Post Fiat node is kind of like it's an AI at the center with a group of individuals or people or contributors that interact with the node and then kind of collectively work together to reach an objective. So there's like a Rick and Morty episode my CTO is telling me about. There's this, it's called a me-seek. I don't know if you ever watched the Rick and Morty episode, but they're entities that get spun up and they're given a task and they have to like complete the task. And the longer they take to complete the task, the more suffering they incur. And so they just like solely exist to complete a task. And if they get a really hard task, then they have to exist for a long time. One way to think about like what we're building is like really nice tooling for spawning up objectives and those objectives to be completed. Right? And so the groups of people we want to engage with that are people with objectives that are fairly long-term in nature, right? So we want the churches, we want the super PACs, we want the philosophical groups, potentially intelligence agencies, on one side, and then we want the banks, right? And we don't want pretty much everyone in between.
So Alec, this is call to action. People on the both side of the curve, left curve and right curve, to basically reach out to you. One thing I'm seeing, and my observation has been, maybe I'm short-term in thinking, is that these AI agents are quickly becoming commoditized, and even some of the frameworks in crypto at least are very quickly becoming commoditized. So for example, I'll give you an example with my own experience. Let's say you have an AI agent that does asset management, but what we are seeing right now is that 30 copy pasta are doing the same thing. If somebody creates an AI agent framework, you also see 7 others AI agent framework popping up with little to no differentiation. So in terms of your thinking, how does an individual node on top of Post Fiat stay competitive and have an edge?
Yeah, I mean, actually, like if you kind of think about what a Post Fiat node is, it's a response to this very problem. Nodes are basically groups of people who have shared economic incentives that share information with each other and don't share information with a broader audience. So actually like building in tooling to prevent users or to discourage them from sharing information. One of the things that we've been discussing is that nodes should have their own tokens. So once we move to our own L1, nodes could have their own tokens, right? And that way, like all the users who are part of a node, it's kind of like not only are we sharing information with each other privately that other people don't have access to, that doesn't flow into anybody's open source, ELIZA model or whatever, like they can't scrape that. There's no way for them to get the information on a Post Fiat node. So there's sort of like secrecy, permissioning, and like access levels embedded natively in the Post Fiat stack, right? So one mental model to think about Post Fiat is it's Palantir with a cryptocurrency attached, right? It's like you have a group of agents, field agents, whether they're financial professionals, security personnel, or whatever. They have permissioning. There's a notion of blacklisting. There's a notion of offboarding, and there's a notion of security clearances, such that like the information in the hive is retained, but the individual members do not retain all of the information. So if there's churn of a top trader or a top agent, you don't lose the institutional knowledge. And so it's actually like post-fiat nodes are like probably the most paranoid data structure. It's kind of like, it's like, this is how you do collaboration if you're completely zero sum with your data. And so that's sort of like, it's actually like the opposite in many ways of like, we're using crypto to generate lock-in into zero sum economic actors, right? Whereas like other protocols are like, let's be positive sum. Everybody can like have their own AI agent. We're like, no, we do not want that at all, right? We want nodes to basically exist to get their members rich, right? And
Yes.
members are part of the nodes because they want to make money.
So, Alex, is this mental model correct that individual nodes are kind of operating as a data DAO, where the data of the hive is more valuable than the individual's data in isolation? So, for example, if all of the people are collaborating and contributing their data together, the nodes become more valuable, but wouldn't have been as valuable if all the individuals contributed data was done in a segregated way. Is that correct way of thinking about it as well?
Yes, and I think like another key idea is that it's not just data sharing; it's task routing, right? So when you're interacting with a post fiat node, you can ask, okay, I'm taking a position in a chip stock. If someone else's context contains deep knowledge of the chip industry, it's almost like the node serves as a salesperson in an investment bank. The job of a salesperson in an investment bank is to know exactly where in the firm that you should direct the client's request, right? So it's like, oh, you should talk to this guy. He's the expert. Post Fiat does that automatically at our node level, right? So when somebody has a request, not only is the information cached, but it's kind of like cursor for a collective. It's like, oh, well, your next action should be to talk to this guy. And we're also enabling capability for people to pay each other within the node without knowing who the other people are, right? Because a lot of these, use cases are pseudonymous by nature, right? Like, so a portfolio manager doesn't want to be doxxed. They benefit from interacting with other portfolio managers, but they're not even on Telegram, right? So we're trying to build this in such a way that it's very, very conducive to high trust relationships that are pseudonymous. And so yeah, just like structurally, it's a very different bet. I had a call yesterday with a guy who's building an AI hedge fund, right? And like, okay, well, actually, the problem is all alpha is zero sum. And the real problem that we're dealing with here as financial professionals is that we used to be able to have an edge from being smart, right? We used to be able to outthink other people, but we're not going to be able to outthink O3, right? And so our edge from being smart is going to zero. And, post fiat at its core is an economic system that assumes that to be the case, right? So we're trying to build almost the opposite of the current meta, right?
Yeah. So would the edge here come from access and information rather than, let's say, setup or analysis?
Yes, as well as institutional knowledge. So I'll give you a very specific example. We're working with a kind of initial client at an investment bank who manages a high turnover organization, right? So he has traders with institutional knowledge, institutional client bases, institutional thought processes that they deliberately, as agents, keep opaque from him, right? Because they want to be maximally portable to every other bank, right? So they want to, be able to jump from bank A to bank B, bank C. And the idea of the trader is that like, I want to be plug and chug, right? Like I can just show up and generate franchise value anywhere. I'm the franchise value. But if you're the person running the desk, part of the adoption of electronic trading was so high because managers hate this as a configuration, right? They're just like, yeah, it's a pain in the butt to do electronic trading, but it's even worse when my high yield credit trader switches banks and we lose our entire, business process related to what he does, right? And so one of the advantages of LLMs basically allows a manager to create agentic versions of their employees, right? So it's like, here's an individual, and this would be true of an intelligence agency too. Any like you have an agent in the field who dies. Like what happens? What's the knowledge transfer process? You need to have basically a system, and obviously intelligence agencies have like a very good process for this. That's manual. And a lot of, Palantir's value add was taking that manual process and like formalizing it. So there's like an ontology such that like his entire process could be ported to another agent in like 2 seconds, right? When you start to add AI into the situation, the part of the reason why Palantir, for example, is skyrocketing so hard is because the cost of that knowledge transfer, even like pre-AI Palantir, was very, very, very high still. But the cost of that knowledge transfer post AI is basically going to zero, right? So, and it's going to go even lower where you can literally replicate an AI agent of a person on the node, right? So nodes eventually are going to be AI agents that are also like learned versions of the people on the node, right? They're almost going to be doppelgangers that are trained based on the information. So it's not just a data repository. It's almost like a way to train entirely new economic models that basically drops the cost of losing key knowledge.
So we discussed moats, how AI agents will have moats, how nodes or AI agents within Post Fiat have node. I want to shift gears a little bit and want to discuss the moat or the competitive advantage of Post Fiat itself. So again, my understanding is the mode of Post Fiat could come from its economic model or its tokenomics, where basically you're incentivizing through your validators emission those AI agents that are generating a lot of economic value. So in essence, what you're doing is you're giving these nodes or these AI agents arsenal to achieve product market fit faster and basically giving them the arsenal to go and get it. And because of that, that will attract a lot more user to the platform, and that leads to network effect. Is that the correct way of looking at the post-fiat mode? What do you think the system as a whole, what its competitive advantage would be?
Yeah, so maybe what you just said would be a way to look at our TAM and not our moat, right? Like let's say the TAM is finance coins, and being a decentralized version of XRP that uses AI and targets the investment bank rather than the transaction bank. It just from a very TAM perspective, Goldman is worth as much or more as HSBC. And so there's kind of like a 1-to-1 TAM comparison with XRP. But our moat is substantially different from that. Like we're using the mechanism you described to access a large TAM and be differentiated within the TAM that we're accessing. But the moat is actually the specific tooling that we're building around the nodes and also how we're building that tooling to relate with our L1. So that sort of ontology that allows groups of individuals to interact with an intelligence in the middle with permissioning, offboarding, super user definition, user classification, blacklisting, reward functions, routing capabilities. Like there's kind of a set of canonical actions. There's the meme, the original OpenAI story is like, okay, my plan is to ask a sufficiently advanced artificial intelligence entity to make me money, right? That was OpenAI's original quote unquote tokenomics, right? That was like what Sam Altman was pitching. But Post Fiat is almost like an answer to how does that actually work, right? Like, an example that a lot of engineering people will understand, for example, is if you hire, the reason why all these tech companies are not hiring junior engineers is because you can't just give a junior engineer an AI tool and like tell him to go do something, right? Because if you do that, then he will just basically click accept over and over again on cursor, and he'll ship some terrible code base that's impossible to debug, that's very, very large, and like basically doesn't work, right? Because he doesn't understand any of the components. So there's like a managerial layer that needs to be put on this junior engineer in order for him to ship effective output. And that managerial layer could be best viewed as the node, right? So in order to have AI agents that go and do things that make money, you need to have essentially an artificially intelligent managerial layer, aka a node, and that node needs to have a lot of tooling. That tooling is quite complex, arduous to build, and once you're trained on it, you don't want to switch tooling, right? You're like, that's similar to the Palantir lock-in. Once you train someone on the government tooling, it takes forever to learn it. And then once you're on it, you can't easily port. And then once you're familiar with it, you bring it to other organizations that you're a part of. And so I think our moat is just going to be, I think we're lucky because there's not a lot of competition, especially in the areas that we're targeting. And as we build the standard ontology by which these AI agents like become economic, I think that will generate a moat over time.
So just to recap, the modes of post fiat. So initially, you'll have inertia from first mover advantage that locks in people and creates network effect. So that could be one mode. And the second one is the switching cost of devs and people building on top of post fiat. So would you classify those as the main competitive advantages in terms of what you guys are building towards?
Well, yeah, and then also just the nodes themselves, right? Like as a node exists, it generates more and more transaction history, which is private, and then it has organizational knowledge, which then can't easily be siphoned from other networks.
Yeah, yeah. The network effects from the nodes. Uh, Alex, great. I think we're on the last section of the podcast. So, Alex, if you weren't building post fiat, what else would you have done?
I don't think I would like. It's a really hard question to answer because I came to Post Fiat from just a very, very simple calculation, right? Like I wrote this essay. It's called The Black Print. It's on my website, and I sort of came to the conclusion that we have at most 4 years, maybe 5, 6 years before AGI hits. And the additional kind of conclusion that I came to was that our actual system of currency is not stable because of the debt levels that were coming in. So we have these two macro forces. And as we're seeing in the gold market right now, like the sand beneath our feet is not stable. So it's really, really hard to build a business in a world where your currency isn't stable, right? And so, post fiat is my best interpretation of where I think currency is going after AI hits, right? It's basically a world where you have a large collective of super intelligent AIs with groups of people around them, basically doing what the AIs are telling them to do. And different permutations of that, whether you call it post fiat or not, are what I would be working on, because I think that's the future. I don't think the dollar or gold or Bitcoin or XRP or Ethereum are appropriate expressions of where I think this currency system is migrating to. I think it requires a complete reimagining of like what value is at a basic level. And that's the only way that I was able to answer the question, like, how do you get to an acceptable outcome such that like after AGI hits, like my work is even relevant, right? So that was like sort of like I'm super post fiat filled, and if I weren't doing it, I would just be doing some permutation of it that's not called Post Fiat, but does the same thing.
Love it, sir. Alex, before we conclude the podcast, was there a question I should have asked you, but didn't?
I guess like one element that we didn't really get into was the existing user base and, Post Fiat's kind of go to market, which is substantially different from XRP. I mean, I think we're having a lot of really interesting.
Boom. Let's double click on that.
So, we have, like, before I started Post Fiat, I was using artificial intelligence systems to generate investing returns, right? And very simplistic models that basically take really big context windows and apply them to stocks and cryptocurrencies and assets and make decisions that are just force ranking the assets based on their scores combined with some proprietary internal data. Very little defensibility, in my opinion, to this sort of trading. It's kind of in a white space because of how new this, and I think I'm willing to take a little bit more risk than some firms that need 1 to 2 year windows to see that this stuff is working, right? But I think what is quite powerful about Post Fiat is that as we have this community of really, really intelligent people, including yourself, including Jack, Hypersphere, people who are capable of sharing enormous amounts of knowledge with nodes. Now, this knowledge transfer allows us to generate, substantial proprietary alpha that can be mapped onto existing investing signals. And so I think, like, as opposed to a block one, which puts everything in Bitcoin as a sort of treasury decision, I think Post Fiat is going to have a really, really differentiated treasury management program that, as our user base grows, will become more and more powerful. Like I believe that the AI agents on Post Fiat, they are designed to generate investing alpha for the node operators, right? So it's like, I believe the system is going to make not only our clients, much better trading organizations, but I believe it's going to improve our treasury management directly. And so I think it's just like, I think capital markets, I guess I would invite capital markets focused people. Like, we have a lot of our investors are kind of multi-manager pod shop guys, right? Because they all understand where the world is going to. They see the outputs of these signals. Like, I'll send them the outputs of the signals. They'll be like, oh, damn, like, this is definitely, where the world is going. I want to be part of this, right? And so I think that's maybe like just the thing that we didn't touch on. We touched a lot on XRP tokenomics, a lot about like where the world's headed. But the very concrete thing is like, Post Fiat is going to be a lean organization, which is designed to convert AI driven insights using our model of nodes into real profits. And so I think that's going to be like an exciting differentiator with us versus other projects over time.
So one day, can you imagine the Post Fiat protocol to be zero employee protocol?
Think that is so certainly on the foundation level, it's in our roadmap that we currently have a monthly process that we talked about that generates this set of prompts to allocate network escrow. Currently, people are involved in that process, which is not ideal. Ideally, we want AI agents basically performing simulations of the most effective network escrow allocation process and executing that mandate in a trustless, verifiable way, right? Because like right now, we can publish the social contract, but then you can still disagree with the people involved and who created the social contract and say that they're biased. And we want to even remove that. So definitely, we view our foundation and our escrow allocation process as becoming zero people. In terms of node operations, I think node operations are always going to have people involved. So at our L1 level, when people are like, okay, like, what are you going to do after, Post Fiat, like the L1 has no people involved, are you still going to be involved? My answer is always, I'm going to be running a node, right? The people in the network are going to be gaining a lot of benefits from interacting with Post Fiat nodes, but the network itself, I mean, our aspiration definitely that eventually this thing is trustless, completely automated, and has maybe not zero people, but like a very, very minimal staff of people whose primary job is just to say, did this run? Right. So zero is ambitious, but at an L1, I could see a world where we had like 2 or 3 people who are not senior, who are just watching a model run.
Alex, this was great fun. I learned a ton. Thanks for joining us. I'll drop down the link for your writing and your Twitter so people can follow you and also read about some of your thoughts. Also, guys, if you are keen on running a node, please slide into Alex's DM.
Yeah, especially if you're at a financial institution, we're already having substantive conversations with trading desks. So especially we love people in private wealth management. So if you're in, crypto trading at a bank, if you're in private wealth management, hit me up. I'd love to talk.